What's good, y'all? This is another episode of Monday Night Take brought to you by me and TR, the Panther and TR Swain to be exact. Shout out to the Come Up series. We've got another action packed episode tonight. Super excited to talk about everything that transpired in the markets today. So, like, share, comment below, and send this over to a good friend of yours, family members, and get ready. We're ready to rock and roll. So, well, let's get it.
That's 100.
Yo, so what's going on, TR? How you feeling this week so far?
Oh my gosh, Lawrence, I'm feeling rejuvenated. I was so sick, y'all, but I feel so much better. How are you feeling today?
Oh, I'm great. I'm great. I cannot complain at all. So, had a good workout, got a haircut, good solid little day. So, I'm cool. I'm cool. I can't complain.
No, that's awesome. That's awesome. I just did a Caribbean workout. I'm going to Carnival, y'all, later this July. So I'm so excited. I'm Jamaican. So yes, I'm in
Okay,
my
enjoy.
mm-hmm.
Enjoy. Have a good time. So, I mean, we're gonna pretty much get right into it tonight. We're gonna cut to the chase. And so yeah, man. First thing foremost, I wanna pretty much start off tonight's show talking about execution. So I want to take a couple of minutes just to really talk about execution tonight. Right? It's good to get all the information in the world. It's good to attend seminars. It's good to attend classes. It's good to watch YouTube, right? It's good to be on a YouTube channel. But there's nothing like just going out there and just executing, right? Actually doing, implementing the things that you're learning about, implementing the things that you're aspiring to become good at, right? Implementation and execution is everything. So, I just wanted to reiterate that. Don't get caught in analysis paralysis. I think a lot of times, anything in life, right? A lot of times, whether not even just talking about trading, markets, whatever, right? But even outside in your everyday life, just go out there and just make decisions to just go out there and win. And that's just the reality for me, is just like, execution. You can never really be mad at yourself if, you might have made a mistake, it might have took a loss, whatever it may have been, whatever. But you can never really ultimately be mad at yourself. Just go out there and just continue to execute. I just wanted to hammer that point home because I have a lot of conversations with people, and a lot of times people get caught up in analysis paralysis where they're like, yo, I need to do XYZ before I can do this, right? And it's one of those things that those mental blocks and hurdles that we always got to get over. So wanted to start the show off by just really saying that and addressing that. So a lot to talk about. I know last week we spoke a lot about earnings, right? This week we had the Federal Reserve. JP Morgan had a bold move buying, First Republic Bank's assets. So I want to get into that because one of the things that we talked about here on the show, that the banks honestly would never fail, and big bank take little bank. I think that is pretty much what you saw today. Someone asked me to, sum it up into a, sentence: big bank take little bank. Simple as that. So, TR, what's good in your world?
So I can say that I was really positive last week. Like before we saw all of the earnings. And what's interesting is that I'm just seeing a pattern, Lauren. So with all these companies, right? Google, Microsoft, like all of these companies, they all did well. They all surpassed all of their goals this first quarter. But what's interesting is that this is going to take a direct hit on the labor market. So I just want to bring to everyone's attention that 2027, we're going to be at a deficit by 14 million jobs. Okay. We're like, what is this? Like almost like 3.5 years away from that. And I just want to tell you that now is the time. So Lawrence just mentioned the importance of execution. Now is the time to get ahead. I just share with you, if this is okay, I just want to share like the most 10 jobs that will be gone, okay, by 2027, get everyone's attention. So first it is bank tellers, postal service clerks, cashiers, executive assistants, material clerks, stocking clerks, accounts payable, payroll clerks, all of this, everything's going to be taken over by even we're going to see it there too. Now, in terms of like the most in-demand jobs that we're seeing, it's all literally all tech, right? All cyber. So AI, so artificial intelligence and machine learning is going to be the number one job, okay, in terms of openings. And then it's going to be followed by sustainability specialists. And then you're going to have business intelligence analysts. Hopefully I'm not going too fast, y'all, right? Next, we're going to have information security analysts, fintech engineer, all, I mean, I would like to say like they're all, I guess, like altered around cybersecurity. But now we're introducing intelligence, right? Now is the time if I want to get these certifications, please. So in general, y'all, to give you some more context, about AI is going to be literally nearly a quarter of all the jobs that we. Oh no, he's saying that. Oh no, he's saying that my signal is choppy. Sorry about that. We had a storm where I'm at, so
Yeah, probably. What you should probably do is probably
I'll
come back.
yeah, I'll come back.
Yeah, come back. Yeah, just
Okay.
come back again, and I'll take over for now. So yeah, nah, but she pretty much listed. So while she's on the way back in, she pretty much listed 10 fields, 10 different job descriptions that pretty much are going to be wiped out. So that's super duper huge for her to really highlight that. And the point that she was getting to was also when just taking a look at these different corporate earnings. We had a good conversation last week, and actually on Monday, we kind of closed out the show, and I was asked the question of, do I think not bank earnings, but do I think overall earnings would be that bad for that week? And I said, nah, I think a lot of companies will actually exceed their EPSs, and you'll probably see a few positive reactions for the most part. After that, we saw Microsoft put up a banger, and then we also saw Meta Platforms put up a banger as well too. And then Amazon came in. The numbers were pretty decent, but then the guidance was a little bit. They got it down, so the stock kind of lost some of its steam after hours and pretty much turned negative about $2. But it's still in the same position pretty much that it was last week when we spoke. So for the most part, you have seen some companies exceed some of their expectations, and a large part of that is to do, the recent layoffs. That was another question. The recent layoffs, a lot of these companies were able to still hit their financial goals, even with the recent layoffs. So I think that's super important that we highlight that, as we're here, here right now, coming into this zone, right? In this time of the year when it comes to the market, earnings season is, like I said, always one of those times where I just think it's super duper important for us to pay attention and look at. So what I would say, for me is hearing her list all those different job titles as far as those jobs disappearing. AI is here, and a lot of these companies are going to continue to operate at a higher efficiency level. So we highlighted that pretty much well last weekend. We seen how it panned out. Meta Platforms, it did exactly what we spoke on last week here on the show, man. We saw Meta hit 240. So it was beautiful. Microsoft cracked over 300. The first time that we've seen Microsoft crack over 300. So that was, in my opinion, that was super amazing to see Microsoft crack over 300 for the first time in a while. We saw Nvidia make a new high today. Nvidia actually went ahead and made a 52-week high, so that was beautiful. So a lot of the companies that we was looking at, and probably some people was looking at and saying, hey, they're a little bit scared. Those companies right now are actually exceeding a lot of their expectations, right? So I think we're seeing that, truth be told, that there was nothing really to really be afraid of, but there was a lot of fear mongering that was happening, right? There was a lot of fear mongering that was happening throughout what I would say the past, 6 to 12 months, where people were being told, hey, this company isn't coming back, this company isn't coming back. We're going to talk about the Federal Reserve. What does the Fed have on tap this week? So it's a lot of things to unpack, but I think what we learned is that don't doubt the winners. Don't doubt these companies that like are dominant. Don't doubt their dominance. Don't give them the benefit of the doubt. Like, give these companies the benefit of the doubt. At the end of the day, the stranglehold that Meta Platforms has on social media is just insane. So it's like when I was hearing that Meta is dead, I was like, yo, like, what are these people talking about? Like, I always pointed to when Instagram went down. I want to say that was like October 2020.
One.
Yeah, 2021. Yeah. Because
Mhm.
I was in Tampa, Florida. It was like the first week of October 2021. I remember that. Instagram was down for like 6 hours, and you would have thought the world had ended.
And Facebook too. Yep.
And
Both of
Facebook
them.
too. You would have
Yep.
thought that the world had WhatsApp wasn't working. You would have thought the world had ended. The amount of text messages I got, people like, "Hey, your Instagram working?" Boom, like so. It's like, yo, that right there was just an example for me to understand. Like, come on, man, you guys really think this company is gonna go to the wayside and TikTok was gonna take over? Like, TikTok can have a share. Don't get it twisted, but
Yeah.
they're not taking down Meta Platforms, man. You got a stranglehold. I'm excited to see what Apple reports this week. Um, Apple has a stranglehold. They got a stranglehold on everything. Apple's the best company in the world, and it's not even close, right? Not even debatable. When you think Apple's a lifestyle, and when you take a look at, Apple, man, earnings this week, Apple's literally knocking on the door of becoming a $3 trillion company again.
Yeah. And I can also say that just piggyback on like the career side of Apple, they didn't really do really any big layoffs. They actually stopped.
Yeah,
So that really what it goes to show you is that they really do have their best interests at heart in terms of their employees. Because you have all these other big tech hitters like LinkedIn has several layoffs. These Amazon, it seems like every other day is happening, right? Over like what is it, over 30,000 people?
unfortunate, man. Yeah,
Yeah, it is unfortunate. It is unfortunate. But that CEO, like what he decided to do was not make any more money. Like he basically like stopped because he could have made a raise, right? Then it would have
yeah,
cut all those jobs. But he put his people first. And you can really, I mean, that's an honorable act. So yeah.
yeah, not 100%. So, yeah, so that's pretty much our icebreaker for right now. We're pretty much gonna get into the swing of things. So, when you take a look at today, you saw JP Morgan, JPM, they ended up stepping in and actually buying First Republic's bank assets. So, and I want to kind of say so. Obviously, JPM went up about 2% today. Um, One of the things that I would say is that when I look at it, um, I look at it from this standpoint of like I mean it, big bank take little bank, right? And just taking a look at the numbers, it makes sense. Like these companies, see me like a bank like JPM, they're gonna absorb First Republic's banks, obviously their assets.
Yeah.
Uh,
It was 2.6 billion. Yeah.
yeah, so they're gonna absorb their assets, and so this is why I always kind of like when everyone's like the banking crisis, the banking crisis.
We
One,
already.
like there was never to me. I'm not saying that I won't say there was never a crisis, but I don't think that it was to the degree where people were drawing it up to be. I think that there were some issues, obviously some pipes busted, but it wasn't to the ability that things couldn't have been fixed. And you've always seen this. Banks have bought banks forever. And the big banks have always bought little banks, right? The smaller banks. That's been the makeup of how this thing works. Big bank take little bank. And that's exactly what you saw here today. So I think this was a good calming point, and this is exactly along the lines that I said. It would happen probably around, like I said, some point in mid Q2 to Q3. The banking stuff would fizzle out. It would calm down, and here we go. JP Morgan steps in. You're not going to hear anything else about the banks. That's done and over with. Banks will continue to go up. JP
Mhm.
Morgan, Goldman Sachs will probably, ride out through the rest of the year, and everything's smooth, right? They came in and pretty much bought First Republic Bank. So
Yeah.
we saw that today.
But I
Right.
have a question for you though. So are you concerned about what's happening with these commercial loans? Because if you think about it, right,
Mhm.
I think that they don't really have like the best attractive returns. And a
Mhm.
lot of times they might have high default rates as well. So do you think that is like a concern?
Yeah, I think obviously for the great question that she actually just asked. So, you know, especially as interest creeps up, and
Yep.
I think that's an important warning. When we talk about the Fed, as if interest rates obviously, like you said, continue to creep up, and on the commercial side, right? Things a lot of times on the lending side can get a little bit softer if as far as affordability,
Right.
and a lot of times those defaults, so those credit defaults, I think that's the issue and a problem that I think we'll kind of just have to wait and see on. But I don't think it will be too much detrimental. Could you see a bad quarter because of a lot of defaults? You definitely could, but I don't think in the long run it's going to be detrimental. Yeah.
Oh, yeah, gotcha. Because I know that you have like low other loans that are fixed, they can make on that, but with those commercial interest ones, it's going to keep going up. It's like
Yeah,
predator
exactly.
type of loans. So yeah, that's what I'm thinking about.
Yep, yep. So you got that. Also I would say, when taking a look at even on the banking side, I think you know, I just think overall, like I think the bank that bank narrative that was ran was like, oh, the banks are like the banks. Like people was like, people were pulling their so many billions of dollars was being pulled in withdrawals. I just
Yeah.
think there was a lot of I think there was a lot of just misinformation. I think that's the best way to just sum it up. I think there was just a lot of misinformation, and I think the media preys on stuff like that,
Of
right? Like,
course. Of
like I was reading, yeah, like not to really not to really go off topic today, but I was reading like a sports article, and I was just like, yo, this is just crazy. Like just to like I was just like the media and I read a lot of finance articles, but today I was just reading a sports article, and it was on a Ravens outside linebacker. And I just looked at just how like be it like for me, I'm able to read and see through it, but somebody else might have just only read the first paragraph, right? And the Ravens pretty much declined to sign a rookie to an extension, right? And they was basically in the article saying the rookie failed to live up to expectations. But meanwhile, that same rookie, they put at the end of the article is like the second to last sentence. But this rookie had, X amount of sacks, X amount of passes defended, X amount of tackles. I think it was like 300 tackles. I think they had a few interceptions, and they had like over 20, I think it was like over 15 sacks. And he was only one of three people to have done that since 2020. So only one of three players in the NFL to have done that. But in this whole article, you're talking about how much this person didn't live up to the expectations, but he was leading in all of these different categories. So that's why I just say it's like, yo, sometimes you have to really vet who's writing this stuff or who's on TV talking about this stuff,
hmm
because that there a lot of times their opinion is not objective, and they can run with a storyline and a narrative that really just isn't true. So I think we saw that play out today. JPM made a bold move buying First Republic Bank. So I think that, like I said, you could pretty much put that to bed. But one thing that you can't put to bed is the Fed. The Fed never goes to bed. I think that's a good saying. The Fed never goes to bed. So one thing you can't put to bed is the Fed, man. So it's Federal Reserve Week. Also, TR, it is employment week as well. So
hmm
we do have the employment numbers reports that come out.
Yep.
And the Federal Reserve has illustrated many of times that they take a look at those employment numbers before part of their ability to make interest rate decisions come
Right.
based off those numbers. So anything that on your side that
hmm
you're kind of expecting this week, if anything, to come out.
Yeah, well, I think that, I mean, although long term is looking very murky, short
Yeah,
term that we're still seeing a positive lift because there were so many more jobs that came out of April. So I'm excited to see like how that would transition.
yeah,
Because that number was it was like over 200,000 more versus what it was in March. So it is positive
yeah,
there. But the one thing I will say is what people need to pay attention to is if we ever do get a part of a labor shortage, all of this has a trickle effect, right? That's going to hurt production. That's going to hurt transportation. That's going to hurt supply chain. And so
Yeah.
what all of that was going to do is it's going to make the cost of doing business even more, which means it's going to, we're going to feel all of this. I feel
Yeah.
like sometimes, especially, I don't know, I just feel like sometimes we're like on like a hamster wheel of death. I hate to say it like that, but that's what it feels like sometimes, because with these interest rates are going so higher, people may have to go to credit, higher interest rates. It's like a never ending cycle, I guess.
Hmm.
So it is a little bit murky on their end. But yeah, but I do know that in terms of oil and gas, they put out like an additional 10,000 jobs this week alone. So oil and gas is definitely on the up and up. And so is the environment sustainability. I can't stress this enough. I really think y'all should start investing in this for real. Like for real. Green is going to be the way for sure. So
Hmm.
yeah, but I'm excited to see what these numbers are this week.
For sure. Yeah. So I also think so great. Really, 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 really great. This week, the Federal Reserve, obviously they're taking in those employment numbers. But I think this week is a big week for the Fed. Honestly, anytime the Fed speaks is a big week, anyways. But this week I think the Fed. What the market is really looking for, the market is looking for the Fed to say, "Hey, we're going to raise interest rates again here, but this is it. This is it."
I will hope so. It's been 10 times.
Yeah.
Like, come on.
That's
Hey.
what that's what the market is looking for an end, right? Now, will the Fed give an end? I don't know, right? But that's what I can tell you. The market is really looking for now. All right, when is the rate hikes actually going to stop? Right? That's what the market is really looking for this week. And I want to really hammer that point home is because I think this week is really going to decide, like I said, what people are looking at next. And I don't believe that there's a lot of fear that's in the market. I don't believe that there's a lot of fear in the market at all. I'm looking at the VIX. If you take a look at the VIX, hit 15. So fear has definitely left the market. I think the SPY has a capability to, and I was talking about this last week as well. I think the SPY and the QQQ both have capabilities to go up, another 5 to 10% even this summer. Um, and looking at it, I see a pathway higher for names like a Microsoft, obviously, and names like an Apple. I think Apple's going to go back to being a $3 trillion company. I really, really believe, that these companies are going to go back to all time highs sooner rather than later. I think that the dust is starting to settle on some of the narratives. And that's why I talked about the media, right? Notice while the media was feeding all of that garbage and all of that BS, no, pay attention to the movement of the stock prices, please. Pay attention to the movement of the banks, right? All in March, you heard bank, 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 bank. And then in April, no one's talking about it. JP Morgan buys First Republic Bank. And you've seen the banks pretty much just be fine. You've also seen, I'm excited to see AMD earnings tomorrow. Like we talked about earlier, Apple's coming out this week as well, too. So I'm excited to see more of these companies report to put these narratives to bed. And institutions are buying, right? They are not, they like you can see it point blank, period, on the charts. Like we're not going, the SPY is not falling. The QQQ is not falling. Yeah, they might not be going to hitting all-time highs,
Yeah.
right? But what you're seeing is a small, slight moves higher. It's the market is pacing itself. And before we know it, the market itself, right? Maybe not this year, right? But before we know it, the market will be back at all-time highs. The same way certain companies are already knocking it. Like, pay attention. The
Yeah.
SPY is not even nowhere near an all-time high, but Apple is already knocking on an all-time high again. Microsoft is trying to get back to an all-time high. So looking at those, like paying attention to those little things and those little details, will really go a long way. So the warning of the Fed, right? I think the CPI reports have become, I won't say irrelevant, but even people are kind of immune to the CPI reports for right now, right? Where they're not as interested. People want to get answers as to, okay, how high will the Fed take interest rates? The Fed has not budged in the past 6, 7, 8 meetings over how high they're willing to take it, right? they're like, yo, we're gonna keep pushing this thing until we see some results. And overall, like if you really just look at, I don't take what people are saying. I look at the charts and I look at the numbers to base, okay, what is the results and what was the thought processes. So for me, it's like, okay, no, I don't think anybody, in my opinion, is really that mad that the Federal Reserve has raised interest rates as much as they have, right? And the reason why I say that is you could just take a look at certain stock prices, and you could take a look at certain areas of the economy, and I would say I don't think that everyone is as mad. I think there's certain parts of the economy that obviously have been hurt because of those interest rates being increased as much.
I was just about to say that because y'all, I know honestly, real wages are getting hurt. Okay, they're declining as soon as like much as this inflation rate is going up.
Yeah,
It's a lot. It's just really scary right now. I think because I know that they can't keep up. It's just a lot. It's just a lot that I really feel for these families.
yeah,
I really do feel for them because you already think about it, right? You got the cost of living is going up, but like the wages, right? They're just staying the same. I feel like they're back in the 90s. It kind of feels like that, right? But these prices keep going up. Car notes over $1,000. Like,
hmm,
to me, the math is not mathing right now. Like, and I'm also just curious to see, like, really, where's this dollar going to go? Just, I'm just curious, like, would that have an effect?
yeah. So I mean, here's my thought on it. I mean,
Mhm.
at the end of, here's I guess here's what I would say, right?
Yeah,
It becomes a battle of wants and needs though too, right? Because when
true.
you say $1,000 car note, that's not necessarily something that someone
Right.
that's not necessarily something that someone needs. That may be something that someone wants, but it might
Yeah,
not necessarily be a need though. Uh,
yeah,
and and that's where I just think that's where you got where you differentiate what you want versus what you need. Um, and I think it comes down to as well, especially for mortgages. I think that's the biggest place where people have gotten hit the most, right? For the most part, because mortgage qualification, right? I think that's probably one of the biggest areas, not maybe not the biggest, but probably one of the biggest
yeah,
is mortgage qualification. And these companies, right? A lot of these banks, they do not want to lend to black people to buy homes. And I'll say that point blank period. Have no problem going to any financial institution and saying it because the data's there, right? Uh
yeah. From like
strate-
the decades ago, correct?
exactly. They strategically, like if we even want to get into the FHA, the FHA when they first when they first started giving loans out, when the FHA, they weren't giving it to black people. So
Right.
we can just even start there. So when people talk about real estate and black people owning real estate, it's extremely been tough for black people to even get into real estate and qualify for real estate. Even from time again and time ago, right? And then even into today now, when you talk about real wages,
Yeah.
that's also something that's happening as well, to price people out from being able to actually buy a home, because
Right.
the qualifications, they don't want to they a lot of these companies, and it's on record, Wells Fargo was indicted. They had to pay fines for things like this, right? Where
Let's
they
not get started on Wells Fargo.
so exactly where they were denying black people on purpose from getting out, from not just housing loans, car loans, all
All of
types of stuff.
it.
So all this stuff is documented that I'm saying right now. So I look at it from that standpoint. You bring up a valuable point. These certain tech companies have definitely been hit. Cost of capital has increased.
Yeah.
So you take a look at some of the private equity markets. Cost of capital has increased. So a lot of different variables to play out. But I think the market, like I said, market be just fine, man. Don't
Yeah.
listen to the narratives that people are running where everything's crashing and burning and
Yeah.
it's over with. I think that's where the danger comes in, is where people are just listening to people just cuz, you know what I mean?
Yeah.
Um so yeah. Yeah.
No, I could totally feel that. And I know what's also interesting, well, what really didn't help is that if you all remember, 50 million people quit their jobs in 2022.
Hmm.
You had over close to a million in America that did pass away during the pandemic. So I know that's also impacting in terms of like this labor shortage.
Yeah.
But as you mentioned before, people still have time, right? They want to get out of these jobs. They want to go full time with their business. Like now is the time for y'all to think smarter, not harder. Okay. Get
Yeah.
ahead of everything, get your finances together, just all of that. I can't stress this enough because whether we're not, I don't know if we're going to have like a really hard recession or not, but we know it's coming, right?
Mhm.
So yeah, I would just say like for you all to get ahead. That's it. Get ahead.
Yep, ahead of the curve, 100%. So yeah, so for me, I think like just even touching back on the point of the Federal Reserve, you had the meeting at 2:30.
Hmm.
At the press conference, the interest rate decision, 25 basis point move. That's pretty much priced in. You're not gonna see, in my opinion, you're not gonna see a real downside movement on the market.
Yeah.
Um, the interest rate move is already priced into the market. Everyone's expecting it. Obviously, guidance is key as always. What are they looking to do over the next couple of interest rate meetings? That's going to be the bread and butter of it. So it comes down to it. So that's we'll come back to the Fed in a second, but I
Hmm.
want to talk about Nvidia today. So Nvidia hit a 52-week high. So let me go ahead and share my screen real quick. So Nvidia hit a 52-week high. So that was fire, 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 fire. That Nvidia hit a 52-week high. So, I talked about, and I was looking at Tesla here. So let's come here. So Nvidia hit a 52-week high today, came right here to my level, came right above 287. So what I was telling people, for those that tapped into my IG lives as well, I was on IG live last night. I was telling people that there was a bull flag pattern that was actually forming here on the weekly time frame. So we had a pole here. This is our pole. Then this is our flag. So it's just like a flag you would see outside blowing,
Hmm.
right? Blowing in the wind. So this is your pole, and this is your flag. So this took about 2 months. This was like a 2 month setup. And then today, as we broke out of this flag, this is a breakout pattern. Price actually rallied above the 280 level, 280.64, and price broke up, went up to the upside. So to be honest with you, Nvidia was the one of the few stocks today that actually ended the day positive. So
That's awesome.
a beautiful, beautiful breakout move, happening here on Nvidia. Let's go here to the 1 month just to show people, right? So if you're taking a look at Nvidia, right? There's not much from its all-time high, man. Like I know like $60 is nothing for Nvidia when it's on fire. So I want to make that very, very clear. Nvidia is going to hit an all-time high this summer. It's happening. It's coming. It is going back to break a all-time high this summer. It's 350, 340. It's going to be tested. It's going to be tested. It has the momentum right now, right? It has that momentum right now. It's going to need to get above levels like 297 next. So I'll be able to pull my levels out from here now. So it's going to need to get over 297, then 305.88, 316.08, and then after that 327. So just pay attention to those levels on the video. I think it's going to be super super important to watch out for. So you got the video. I want you to watch that all-time high, another 60 points. Now Apple. Notice as I flip to Apple here, it's doing the same thing. It's setting up nice here on the monthly time frame. So let's knock it down here to the weekly. So if you're taking a look on Apple,
Hmm.
it's approaching almost its highest level since August 15th of last year.
Wow.
So that's about 8 months since it's been kind of almost pretty much at this point. So Apple's all-time high is right here at 183. I'm in belief this week. Obviously, with earnings, we'll have to see what happens. But Apple, I believe it will get a positive reaction. And I think it's going to try to test 180. I think if it gets over 174, it's going to try to test 180. So keep that on the mind. Apple, you're going to hear talk about them becoming a $3 trillion company again. That is a spoiler, not a prediction. Shout out to my guy Paul Heyman for those that know who Paul Heyman is. But we're gonna keep the show rolling. I want to show a few more, just to kind of give you guys some just thought process, just for you to just pretty much pay attention to and watch out for. Microsoft, obviously, it's been smacking its head right here at 308, 309. Um, it needs to get back above like 315. Um, and then after that, I think it's on its way to, making a all-time high. So I would just keep that in mind, guys, when taking a look pretty much here at Microsoft. It's definitely got more upside, more ways to go. So just keep your eyes peeled on that. And yeah, I'm super excited for what's to come with Microsoft. Uh,
Yeah.
Next earnings season, we'll see where they're at.
Hmm.
But from a stock price perspective, this thing is ready and prime for a breakout. So
But
you
hold on, pause really quickly. Pause really quickly. Pause, pause, pause.
right.
Well, listen, are you aware with like what's going on with Apple with like that patent case? Like, do you think that that's going to have like an impact? So, from what
What's
I read, so like basically, there's an issue. I think it's like with Simo, like with like the Apple watches. So it's hold on, let me pull this up. Pull this up. So yes, so like right now there's a patent battle. Like
between Apple and Microsoft?
it's the Machismo stock. Machismo stock.
Massimo. I haven't heard it. I have to research that.
Yeah, well, I mean, all this happened back in 2021, so I mean, it's still
But you
getting
know,
dragged
they're
out.
in
It's
court, they're in
basically
court right now.
yeah, they're trying to ban like the imports. That's basically what's happening.
Mm. Yeah, here's my thing. Anytime anything happens with a big company, I never here's my thing with Apple. Anytime you're a big dog, everybody tries to come after you. And usually what happens is settlements. I think we could point to even Qualcomm and Apple. For those that don't know, Qualcomm and Apple had I would say, yeah, it was a 10-year kind of drag out over patents and certain things. So those type of things happen all the time. I don't ever really look at them as necessarily, things to kind of necessarily make things super bad. It's just at that when you're doing business at that level, those things are kind of just gonna happen. And you pay the lawyers, you pay the accountants. That's what you pay them big bucks to get that stuff pretty much taken care of. So I think everything will be fine with them, in my opinion. Nothing too bad. Like I don't have any doubts when it comes to these companies. When it comes to Microsoft, when it comes to Apple, hell, if these companies fail, trust me, I'm worried about more than at that point those companies failing because um, it's just infrastructure is just too big at this point. So yeah,
Gotcha. No, that makes sense.
yeah, Tesla could fail and the world would be just fine. And you guys know I love Tesla. I like Tesla. I believe in Tesla, but I'll be honest with you, right? Um, Tesla's not necessarily a need, right? And Tesla could fail, and the world would be just fine. And that isn't to say anything negative about Tesla, but it's just the reality. I love Tesla. I like Tesla a lot. But can we say that if the company, like, if like, I want people to think if Apple was to drop right now, done, there would be some serious issues in the world. Microsoft was to drop right now, be done, serious issues in the world. Um, if 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 um if Walmart's and Targets weren't to open up tomorrow, trust me, there'll be some issues. If McDonald's didn't open up tomorrow, there'll be some issues. So, that's kind of the way I look at certain things. A lot of times, and I think sometimes this information that gets put out, I think sometimes people look at it and it's really all about fear. It's really all about fear gauging. So yeah,
Now that makes sense.
yep. We're gonna come here. I want to actually pull up AMD. So AMD actually here in 2021 made an all-time high of 163. Currently has earnings. It'll be interesting to see if AMD can reclaim the 100 level. That's where it's had issues in the past. Obviously, mid-August here. and then mid March, it made its way to over 100. So I'm looking forward to being able to see, what happens, next here, on ticker AMD. So if it can get back this week, obviously with earnings tomorrow, it's going to be super super duper important to see AMD perform well. So I'm excited to see what happens and what turns out. But that's where I'm at with it for ticker AM Dizzle. So yeah, that's where we're at with it. So AMD has earnings, and yeah, that's where a part of our focus will be for tomorrow is all eyes on AMD. So looking for a reclaim of maybe 102. Um, it's currently at 89. It's a little $10 move. Maybe probably won't happen on the earnings report because AMD doesn't have really that much average movement on a day-to-day basis. But yeah, that's what I'm pretty much watching and paying attention to here right now. I'm gonna pull up the SPY and the QQQ to kind of show and highlight what I was speaking about earlier. So here we are, right? We're pretty much in the fifth inning this year, right? Already, pretty much in the fifth inning. Um, Even though we're not at the halfway point, and you'll kind of see over the next probably over the next few episodes, you probably see why I'm saying the fifth inning. But when you see here right now at 4:15, we're talking about the SPY has an opportunity to get above 422 and then test 427. Like the SPY is at such a critical point here right now. It's at that high of January 30th this year. It is at a critical point. So it really needs to break out. It really needs to start going to 422, 427. Those things start to happen. That's where you're going to start to see more buyers come in. And the selling obviously has really calmed down for the most part, right? The selling has really calmed down for the most part. So as this chart starts to fill out, etc., coming into 2024, like where's the SPY heading? Where's the QQQ heading? These are things that I want people to, be obviously always want to, these are your top two things to always look at. The high of the NASDAQ is up here in the early 400s. So yes, we need to see it clear and get right now. It's currently QQQ is currently at 322. So the momentum is kind of shifting, like I said, more to the upside. So just kind of pay attention to that if we start to see higher highs and higher lows start to be formed more and more. So I want to keep people eyes peeled on the T triple Q. We talked about that before. 3 times levered ETF for the NASDAQ. Low of last year, 16. It is already almost up 100% this year, right? Since the beginning of the year, started off at $16, currently at 28. It is 3 times levered. So when the QQQ, what I just showed you, goes up, right? This goes up, and for every 1% the QQQ goes up, this is going to go up 3% of that, right? So you're going to get 3x, right, to the upside, but also 3x to the downside. So if the QQQ falls 1%, this will be down 3%. But if the QQQ goes up 1%, this will be up 3%. So, keep that in mind that even here at 28, this is equivalent to 405 on the QQQ. The 90 right here, this 90, about 91 all-time high here is equivalent to the QQQ going back to 408. So if you're to buy the T triple Q here at $28 and it goes to 90, that is a 300% return. But if you buy the QQQ at 322 and it goes to 408, that's about a 25% type return. So, just keep that in mind when you're thinking about, the positions that, when you think about the positions that you're taking, keep that really, 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 really keep that in mind, guys and folks here. So wanted to say that, for you guys here. So, yeah, that's that. So, yeah.
Lawrence, can you check out Lyft? Because I know they also had layoffs a couple of days ago. I'm just curious to see what they're looking like.
Lyft's been trash since they ever became publicly traded. Um, Lyft is garbage. And you can see here expressed by the stock price.
Oh my
Ever
gosh.
since publicly traded, it has never traded at its opening day price. It is garbage.
Mm-hmm.
So yeah, Lyft is currently at $10 here. I believe, if I'm not mistaken, hold on. I think Lyft has, if I'm not mistaken, I just want to verify. I believe Lyft has earnings. I thought I saw them on the earnings list. Let me just see. They were up 3% today. Yeah, they have earnings on Thursday after hours. So yeah, I'm right. They have earnings on Thursday after hours, but uh yeah, Lyft probably is on somebody's acquisition list. So we'll see if they get acquired. But yeah, Lyft is hot garbage. Great ride share app if you want to get a ride. Pretty good, but from a stock price perspective and what it's returned to investors, well, it hasn't returned anything to investors. So it's garbage. So yeah, that's my take on Lyft. Yeah,
Thanks for that. I was just curious.
yeah, nah, yeah, no issues. So yep. So that was that's what I wanted to pretty much share here pretty much tonight. Like I said, so we got the Federal Reserve on Wednesday at 2:30 p.m. Expect Jerome Powell to go up to the podium and do what Jerome Powell does. The Federal Reserve has decided to raise interest rates 25 basis points. We decided to keep interest rates here for now. We're going to raise interest rates 25 basis points this quarter. Future rate hikes, we're not too sure yet.
Please, I cannot. Please.
That's exactly what he's going to say. That's exactly what he's going to do. And
Sorry, that took me out.
when the reporter asked him the question, you guys just, the Federal Reserve, we take all those things into account. So when we sit down at the table and we make our decisions, we take all those things into account. Next question, please. So that's what Jerome Powell does. That's exactly what to expect, man. So, if you're trading during that time period, man, it's gonna be volatile. So obviously, anytime the Federal Reserve speaks, it's volatile. So, man, I think it's a great segue to pretty much wrap this thing up.
Yeah.
Great. Obviously, like I said, quiet day on Wall Street for the most part. You saw a little bit of downside action, but for the most part, it's pretty quiet, pretty flat. Nvidia went up like 10, 11 points. Outside of that, nothing pretty much really happened. Federal Reserve is coming. ADP employment Wednesday, unemployment rate Friday, right. Apple earnings. So, man, shout out. We're here May 1st, fifth month already here. So fifth month already here in the building. So super, like I said, super duper excited. So y'all know what it is, man. So another episode here of Monday Night Take here with my co-host TR Swain.
Hey, you guys.
I'll be sure to just go out there and execute, man. Go out there and execute. So you know what it is. So we'll see you guys next week. And we thank you guys for tonight. So peace out.
All right, y'all. Have a productive day on purpose. Bye. Yep.